Okay folks, welcome back to Pete's Investing. It's another day for the natural gas update from the 24th of May 2024. Now natural gas UNG and BOIL have dropped slightly since the last update we did, and KOLD has risen slightly. Here's our heat map, and you can see there on the top right we've got still predominantly, actually it's turned bullish on natural gas across all time frames, so that's a big positive. BOIL is still neutral on the monthly but bullish on the weekly and daily. KOLD is predominantly bearish and neutral on the monthly, and UNG is still bearish but bullish on the weekly and daily as well, plus the other indicators or instruments we cover in various other videos. We did go through a trading idea as well, and the main idea here is to trend in the direction of the larger time frame. So if you're trading on the daily, look at the weekly trend, and if you're trading on the intraday, like the 1 hour, 2 hour, etc., then you trade on the minimum of the daily trend. The next step is you look at the direction of the CCI 150 and you look for fresh breakouts from the moving averages. That's where you enter the trade, and you close the trade when the CCI 150 enters into those moving averages. Very simple. So looking at natural gas first off, on the monthly you can see that it's a fresh breakout above the moving averages. That's a bullish signal. On the weekly it's been bullish now for a number of weeks, and on the daily as well it's been bullish, as you can see there above the moving averages. Do note however the CCI is moving now towards those moving averages, so we may have seen a resistance up here at 31.20. That's a key resistance, and it's actually fallen off there in the last day of trading. If we go to the hourly chart and we use the daily chart as a reference, we trade only in direction of the daily trend. Now in this case, because it's actually fallen below that level, we're looking at a potential retrace to the downside, so carefully going long only. And on the hourly, what we've got here, we had a couple of bearish divergence. It's been calling bearish divergence for a number of weeks now actually. And this is on the hourly chart. And what we did in the last update, we showed you this trend line. Let me just extend that to that point. So that was between, let me just delete that line there. You can see there is a trend line between that point to that point, and that correlates with, let me just delete that as well. That correlates between that peak down to this new high there. So it's lower highs on the CCI versus higher highs on the price. And if we were to draw a target area of a retrace, the minimum, we would go from that high and take it back. So we take it back to the previous point before that divergence started. So that would go back to, you could take it there. You can see there it's already fallen at the 50% level. At that point there, it's already hit the 50%. Or if we extended it even down to that level, you can see there it's bouncing off that 38%, or even down to that level. It's still within that 38% level. So it's already hit our target area. So let's just mark that as a retrace. Now again, this could go further still. This can still drop further, and if it does, we'll keep an eye on it. But at the moment, the CCI is still dropping off on the hourly, but it's making a bit of a move to the upside. But do notice the daily is still bullish, although it's starting to come back a bit. So we'll see how it goes, if it's going to continue further to the upside. In terms of a trading idea, remember what we look at is the CCI breaking above the moving averages. So again, trading in the direction of the daily in this case, because the daily is going long. You always trade in the direction of the higher time frame. So in this case, going back here, for example, on the starting from the 3rd of May. So go back to the 3rd of May. That would have been your first point of entry, around that period. And I've got these marked here with these little arrows to where you enter, and the crosses where you exit the trade. And basically the strategy is when the CCI is in the direction of the daily, when the CCI breaks above the moving average band, and also when the price breaks above its multiple moving averages. And these indicators are available in the description below, should you wish to program them in your charting software. And what I've got here is a stop or a close out of the position when the price moving averages cross over, which they did there. And that little period you would have gained 283 points. Now this one would have been a loss of minus 63, another one of minus 15. That one gained 55, and this one gained 342. And currently we're still in, actually this one would have closed out with a loss of 9. And that was because of this retrace to the downside. Now that's assuming you close it out when the moving averages cross over. You can actually adjust this and use your own strategy using the exponential moving average 9, for example, or any other strategy you've got. Another really effective way to do it is if you're happy with a percentage gain, although you're not going to get these big runs, for example, you might be happy with, as an example, let's say we entered there, and let's say you entered with in this case, let's say a 10% gain, or even, I would go even more conservative, let's say a 5% gain. That would have been a nice little trade to make, and then wait for your next entry, go long there again, and go for another 5%, and so on. So there's various ways of exiting, and there's various ways of entering the trade. So again, a lot of it is dependent on your discretion. On BOIL, on the monthly, there's no CCI, it's not drawing it, so we'll consider that a neutral at best. On the weekly, we've got a bullish divergence versus lower lows in the price, and that's still rising. On the daily, we've also got a bullish divergence, and that's still rising. And that's after it's hit this support level at 1346 and making new highs. But notice, since our last update, it's actually retraced to the downside, similar to the natural gas price. Now, if we go to the hourly chart, again, notice we've still got a move to the upside possibly, although it's moved down further from that peak. No resistance showing yet, although that may have been in correlation with the natural gas commodity price. But again, we've got a bearish movement on the CCI versus new highs on the price up to that level. So that's a bearish divergence, and similar to the natural gas price, if we draw a Fibonacci retracement from that low, again, we take it back to the previous low before that divergence started. So let's take it back to that significant low there. You can see there it's punched through the 38% level. Even if we take it back to that low, it's still punched through the 38% level. Let's see what it does. And even at that point, to be honest, it's gone through the 23% and halfway between the 23 and the 38% level. So let's bring it back to that more conservative area. And you can see there's the target's already been hit between that 38% and that 23% level. So I'll just clean that up as well for our next update. Next, we'll look at KOLD. Again, no sign shown for the CCI on the monthly, but we'll consider that a neutral. On the weekly, it's bearish. So even though we had a bullish divergence here, actually no, that wasn't it was a bullish divergence back here actually. If you took it back to that little level, that little period there, it was a bearish divergence. Sorry, bullish divergence at that point there. Higher lows versus lower lows on the price. It's actually bounced up quite nicely. And now we've got a bit of a retrace, and it's showing a bearish movement on the weekly. On the daily, you can see there it's punched right through the 61% level of that retrace between that low and that high. And it's currently sitting on this 38.75 support level, and that happens to be past the 61% Fibonacci retracement, and that was as a result of this bearish divergence. You can see there lower highs versus higher highs in the price, and the CCI is still falling off. On the hourly chart, again, there's that we've got a bullish divergence, and it's actually bouncing off this potential support level at 38.75. And again, the CCI is still moving to the upside on the hourly. So again, we only trade in the direction of the daily, so we only take short trades. So this is where you would have been careful about going long, because the overall trend is showing you a bearish momentum. But at the moment, it's making a bit of a bounce, nothing too dramatic, but a bit of a bounce nonetheless. We'll see if it's going to continue and punch through this support level in the next couple of days. Next, we'll look at UNG. Now, UNG is still showing a bearish movement, although it's had a big movement to the upside this month. On the weekly, we've got a bullish divergence versus lower lows on the price, and again, it's had a bounce from there. And on the daily, likewise, bullish divergence. We're still moving higher on the daily after making lower lows, and it's hit this support and it's bounced off 1457. And now it's, in terms of that Fibonacci retracement, it's actually resting around the 38% retrace level. If we go to the hourly chart, again, here's the daily as a reference. We only take long trades. So just be careful again. Always respect the divergence. We had a bearish divergence here versus higher highs on the price. That's actually continuing to trend. slightly higher there, although notice the trend on the CCI is still falling off. So we may see it fall off from here as well. Again, there's no major resistance up there at the moment, but it has actually started to potentially retrace at the moment on the 1 hour chart at least. To support us more, go to the Patreon page where we look at weekly scans of bullish shares. Thanks for watching. See you in the next video.